Hi, this is Roger Yohem with Inside Tucson Business. I cover real estate and construction. And we're here today with Rosey Koberlein, CEO of Loan Realty. Welcome.
Thank you, Roger.
We're going to do an update of something we did a couple months ago. And what I wanted to do was start today with kind of an update on what happened with the tax credits. They have now expired and what's happening in the market.
Well, you're right. The homes had to be placed in escrow by April 30th in order to qualify and closed by June 30th, which is right around the corner here right now. Now, there may be some sort of miracle that will happen at Congress to extend that closing date of June 30th. I find that very doubtful, though. I think it would have been done last week, and it never happened. So, for all intents and purposes, that tax credit extension and expansion, that whole process is complete.
Now what we're seeing with the tax credits having expired, we've seen really a huge drop-off in the real estate market. And some of the economists and some of the analysts are saying that really the only thing the tax credit did was actually pull sales into earlier months. Has that been your experience?
I think part of that is true. I really do think that it took business off of future months, but quite frankly, we don't know how much that's going to be, because I think right now there was also a different camp of buyers who said, you know what, we're going to wait until after the tax credit and see if prices come down even more. All right. Now, what they were actually saying, will prices plummet? And I don't think prices are going to plummet, at least in the Tucson marketplace as a whole. Maybe in individual subdivisions or individual product they'll plummet a little bit. But you know, we're at a median sales price right now. Last month was $150,000. That is the lowest the median has been. Average sales price is about $190. So we're really at rock bottom prices here right now. So you know, it's right now we've got a situation where we've got a perfect storm for affordability. We have 50-year low interest rates. I mean, interest rates closed out at the end of last week at 4.69 for a 30-year mortgage. That's the lowest it's ever been. A 15-year mortgage is like 4.13. So you have low interest rates and you have suppressed pricing. It really is the time for buyers to come into the marketplace and really take advantage of this situation. And
one of the elements in that is foreclosures. Because we're seeing in the Tucson market now about 30% of all sales are foreclosures. So you're looking at the low interest rates, the abundance of foreclosures, so that's really making it a buyer's market right now. Absolutely, and quite frankly, the biggest thing that we all need to be focused on is not necessarily the housing market. What we really need to be focused on is how to create consumer confidence. It's that confidence issue. It's the confidence of the buyer wondering, am I going to have a job? Am I going to be able to afford a home once I find a home? Will I have the credit rating lined up? Because that's tighter right now. But it's a process. It's not an event, and buyers need to start that process, which is why they need to be starting to work with a real estate professional. And almost everyone I talk to on the consumer confidence piece says that the key to that is not only jobs, but the assurance that the jobs are going to be there. Absolutely, right. Absolutely. So that's a very good key to recovery. Yeah, totally, because if I believe that if the consumer confidence was back in terms of feeling some sort of strength there, we would be going gangbusters in the housing market because of the perfect storm. So talk to me a little bit more about the historic low interest rates. Why is that important to someone out there looking for a home? Well, because if you're able to qualify for a home right now, that means you have a 30-year mortgage at a little over 4%. So that creates that sense of stability. So I mean, remember, interest rates have gotten as high as 20%. So to be able to lock in for your life at that low of interest rate, and at some point there will be the word appreciation will come back into the marketplace. So for the creation of long-term wealth, a young couple, people who are in college and families with young kids, they should be young kids, meaning in their 20s, they should be trying to figure out, how do we get into this home market? Yeah, I believe the first house we bought years ago was about 15% interest. Right. Yeah, that's
So
very common.
you can imagine what that does to affordability when you start comparing 4% interest to 15% interest.
So what has happened in the last year or two regarding documentation? Because there's kind of a saying right now that real estate used to be all location, location, location. Now it's documentation. What has changed in that area? What are the lenders looking for?
Well, actually, nothing has really changed. Yes, there has been some addition in the documentation for a credit, for a mortgage. What really has happened is that the banks and the underwriters have chosen to enforce the rules that they already had there in place. It's just that before, when you could just sign your name to a loan doc and get a loan, which was really to the far extreme, and we needed to come back from that position, things are now being enforced. It is a challenge to get a loan. And it is something, but it's doable. I mean, we're still able to close loans in 30 days, 45 days, not a problem. But you have to be prepared. You have to prepare the consumer, the buyer, to have all the documents lined up, get it squared away so that it isn't a stressful situation.
So in a refinancing scenario, what's the rule of thumb today? Is it the length of time you're going to remain in your home? Do you look just at the interest rate? How do you make that judgment if it's a good time to refinance or not?
One of the rules of thumb in refinancing is that if you're able to lower your rate by 3/4 to a full point, then it's time for you to start looking at refinancing. And there's some thoughts out there about the refinancing, and that are we going to have a refinancing boom? 50% of the people are saying yes, there's refinancing out there available. The other 50% are saying no, we really are not going to have a refinancing boom, because what's happened when you have 15 million households across the country that are quote underwater, and you go to refinance your home, and your home really isn't worth as much as your loan that you have on it right now, that's a challenge.
Right.
That's a challenge. So, if in the Tucson marketplace, if you purchased your home, before 2000, 2001 and 2, you're probably in pretty good shape. You really are. It's the people who bought at the peak in that 2004 and 5 and the first part of 6.
So in a case where someone is maybe not able to refinance, should they maybe pursue a loan modification?
Yeah, that is something, especially if they have a loan that is been insured by Fannie Mae or Freddie Mac, to be able to go to their lender and say, let's talk about a loan modification and go through that process. And it is a process, and it's starting to happen, but interesting enough, it hasn't happened at the fast rate that the government thought that it was going to occur at. So.
Okay. And also interested in any kind of closing thoughts you might have on the condition of the market today, maybe where you think we're headed, where might we be the next couple of months?
Well, if the buyers feel the confidence in the marketplace and in themselves, and they come back into looking at buying homes, first of all, they need to purchase a home for their family. Look at your lifestyle. Look at what you really will want to get out of owning this home. Don't look at this home as an ATM machine, which is what was happening in the past. So that's the first thing. So I think once buyers come in to take advantage of these low interest rates, suppressed prices that we have right now, we're now at less than 6 months worth of inventory available on the market, and I think people need to realize that. So we're going to be rolling into very much a shortage of homes available to be sold, because the builders are not building right now.
Right.
The banks want to go into the loan modification or short sale situation versus foreclosures. So foreclosures are starting to be pulled off the marketplace. So buyers really need to understand that they have a window that's opened right this moment in terms of being able to capture the advantages of the marketplace.
Terrific. Thank you for coming out today.
Thanks, Roger, for having me. Bye-bye.